Well, hello and welcome back to another video in this series where we're taking a closer look at the VRSI indicator, the volume relative strength indicator from Quantum. And in this one, I've moved down onto the slower time frames, and we're looking at the dailies, the weeklies, and the monthlies. And as before with the other videos, I'm going to focus on the stocks here, and in particular the stocks we used in the initial introductory videos as well, just for continuity. So all I've done here is add a further one, which is Meta. So I think we've got a total of 8 to look at. To give you a flavor of using the indicator very much from a longer term trend, swing, or investment perspective. As I say, I've chosen the daily, weekly, and monthly timeframes here, but this could be anything. You could be on the hourly, the 2 hour, the 4 hour, whatever it is, whatever your time frame, the indicator will work in exactly the same way. And the layout is identical to the one I've used before, where we have the VRSI indicator on the top line with those 3 time frames, and we have identical time frames below with purely volume, our volume price analysis methodology split out, because I feel it's a clean way of representing the two. The two are very much sister indicators, if you will. We have our VPA methodology, which underpins everything we do and everything we've done in the last 25 years for myself and Anna, and everything we put out on the internet, both in terms of educational content, webinars, videos, everything else. Volume has always been the underlying cornerstone of everything. That is the starting point. And the beauty of it is, it doesn't matter what the chart is. It doesn't matter what the ticker is, whether it's an ETF, whether it's a future, whether it's a CFG, whether it's a stock. It really makes absolutely no difference whatsoever. All you're looking at is the relationship between volume and price. So we have that on the bottom line, and then we have developed the VRSI indicator to give us it's a peeling back of the layers, if you will, to give us a view on volume pressure. And what's interesting about the indicator is that we use it from an analytical point of view in a very similar way to the approach we use for volume price analysis itself. And by that, I mean, and it makes sense when you think about it, in a rising trend, we want to see rising volume, and in a falling trend, we want to see rising volume also. And in the same way with the our VRSI indicator, we want to see rising pressure in a rising trend, and we want to see rising pressure in a falling trend, because that converts to momentum. If we have those two in combination, we know the trend has some momentum. It has some power behind it. If we see a trend rising, but the volume is falling, we know it's not going to go very far. The same with the pressure. If we see the trend rising and we see the pressure falling, then we know that it's lacking momentum. The move is not going to travel. The trend has no strength. It's going to run out of strength pretty soon. So you will see a lot of these principles I explain in these videos are very much married to the VPA principles, and the way we analyze the chart from a volume perspective is very similar in the way we analyze the chart from a pressure perspective, because this indicator is all about pressure. Now, if you've not seen the previous videos, very briefly, let me just introduce you to the primary concepts, if you will, of the indicator itself. The first is that we have a zero line, a fulcrum point at which we see the shift in sentiment from bearish to bullish or bullish to bearish, which is fairly self-evident. The second aspect of the indicator is very much the color changes. The darker colors signify strength, bullish strength or bearish strength. The lighter colors represent a diminishing of that strength. So again, very intuitive, if you will, very self-explanatory, but very visual. So you get a graphical representation of this all the time. The third element is the height of the pressure bar, which again will have a lot of common similarities to our VPA analysis, where we're constantly looking at the height of a volume bar. Well, here that translates to the height of the pressure bar in exactly the same way. So we are constantly looking for the relationship between, not only are we looking at the colors, but we're looking at the relationship between the height of the bar itself. How does it relate to subsequent bars? Are they similar? Is the trend rising on the bars? Is the trend falling on the bars? What is going on? And in addition to that, we also look for benchmarking. So we'll look at a bar in the same session and look at it in the context of, well, that amount of price action was, this amount of pressure was required for that amount of price action. So we are using the pressure bar as a benchmark against others in the same session, in the same way that we benchmark in volume. We're looking at the price action and a volume bar, and we try to analyze that in the context of other price and volume bars to gain some idea, a metric of whether the bar that we're looking at, the volume bar we're looking at, is this in agreement, or are we seeing an anomaly here? So it's a very, very similar process that we go through. So those are the basic principles of the indicator. And the last one is very much multiple timeframes, because we are looking at this across multiple timeframes to gauge what is going on in our fastest time frame and how that converts into the trend that we're looking at in our slower time frame, whatever our trading window may be. Now here we're very much in the much slower world of trend reversal trading. We're looking at swing and trend trading, and we're looking at, obviously, this from an investment perspective, much, much slower timeframes. But those principles apply universally. Doesn't matter. This could be a 1 minute chart. We're looking at a daily chart here. We've got daily, weekly, and monthly to consider. So I hope that gives you a thumbnail. But if you want to look at that in more detail, as I say, I've done a lot of introductory videos on this, which explain this in great detail and what you should look for. So here we are, we're on the daily. I've got 8 stocks here. I've got Caterpillar, Honeywell, Apple, Amazon, Tesla, Johnson & Johnson, Walgreens, and I've also added Meta, because Meta was an interesting one as well to look at using this indicator too. So those are the stocks I'm going to roll through quite quickly. So here we are, we're on Caterpillar for the daily. And to really pick up on some of the fundamental concepts there, this was really a drift lower. It wasn't a trend lower. It was very much a sliding lower of bearish tone, if you will. But the gradient of that decline is very shallow. There's not a great deal of momentum behind it. There's certainly not a great deal of pressure. And really, that's all signified by the indicator. You can see we get an initial burst of sentiment here to the downside. The pressure rises, so we're getting rising pressure. But that reverts very, very quickly and diminishes back down to our fulcrum point, as you can see. So the sting, the pressure from that initial move was not really very long lasting and reverted very quickly to low pressure and ultimately back to almost no pressure here, where we're back at the fulcrum. And that really continues for an awful long time. That was early April, into the end of April, into May. Again, the height of the bars is not very significant. It's oscillating around the fulcrum, really not going anywhere. Slightly bearish tone, but really nothing to it. Then we get an injection of bullish pressure. And of course, in amongst all this, we're going to have earnings, which are going to be injecting constant injections of pressure as a result of those, either to the downside or the upside. And then what's interesting about this trend is, first of all, the steepness of the trend. You can see how angled it is. It's quite steep. It's quite a sharp takeoff, and it's a very nicely developing trend as we go from, where are we, 215 up to 250. So a really nice solid move. And what we're also seeing in terms of the indicator is that, take note of the height of the pressure bars. Not only are we injecting pressure because we've gone to a darker color punctuated here throughout, but also note the waning, if I can call it that, or the slackening in the pressure. But that pressure is not denoted with falling height of the bar itself. It's merely denoted with a changing color. So we've gone to a lighter color, yes, but what hasn't happened is that the height of the bars is not receding, it's not declining. They have stayed pretty much uniform. They are marching along like soldiers in a line. And what that tells you very clearly is that this trend has momentum. It's got the pressure with it. Now, of course, we'd be reading this in association with our VPA. I don't propose to spend a lot of time on the VPA charts because I've done so many examples of those, both in the program here and also publicly on the on QTS site as well, and elsewhere in the education site. So there's plenty of videos out there on VPA and VPA analysis. This is much more about the indicator and the pressure side of the indicator, how it translates into the price action that you see on the screen associated. But VPA is obviously, you will be validating this with VPA below as well. I've chosen to separate it out here because I think it makes things much clearer. You, of course, can add the VPA, the volume, to the chart as well if you're comfortable with that. That's absolutely fine, no problem at all. But VPA you must have. So the point here is that these pressure bars are very similar in height throughout this trend. So they're indicating this is a strong trend. And a strong trend is what we get. It's sharply angled higher. It's great. And then as we get to the end of that, that's when you start to see the height of those bars declining. They're not changing color. We're just changing the height. That's all that's happening. And they are just declining as the trend starts to weaken. We then moved into a phase where, yeah, it's trying to rally, but the slant of the trend, the angle of inclination is quite low. It's quite a low level climb. It's a trend. Nevertheless, it's recovering some of that sentiment that were reversed here, but it's not as strong as this trend. And that's what I meant by looking at the pressure bars when we're looking to try and benchmark them against one another to get a sense of, well, is this, how strong is this pressure here? Is it as strong as it was over here? The answer is no. It's certainly a bullish sentiment, but it's not as strong as previous. And then we start to climb again, a little bit higher maybe, and we get some little injections here, but we're still climbing. We're still in bullish territory here. We go into sideways bullish, but it's got us still retaining that. And then we get a big injection, earnings coming in. All of those announcements will inject a huge amount of pressure, and you'll obviously see that on the volume as well. Big volume spikes when we get the earnings announcements, the quarterly earnings coming in. And as you can see here, big injection on the first one, and then it starts to decline. And of course, the pressure drops away as well, as you will expect. And of course, seeing a candle like that, whenever we get positive earnings announcements, there's always going to be profit taking, which as a result of that, it could be a trap move if it's on low volume, of course. But if it's associated with good volume, that's generally okay, of course. But then you're almost certainly going to see profit taking, particularly when you get a big gap up like this and the stock flies and it goes $10, $20, $30 up. Of course, you're going to get profit taking as a result of that. And almost invariably, you tend to see this sort of reaction lower. It doesn't mean the stock's coming off. It doesn't mean it's hit a high. It's just a natural follow-on from such events. And we see that decline in the pressure bar height on that reversal. Moving to the weekly, how does all that relate into the weekly? And this really is a very nice chart for explaining the concepts of the indicator, because you've got both bullish and bearish trends represented. It shows you the importance of the fulcrum line, and it also shows you the variation in height. Again, both bullish and bearish on the various trend phases throughout this. This is a phase that's gone from, where are we, about a year and a half. So this is a long phase of price action, and the same principles apply. So you only need to look at it. We get injections of pressure here, the pressure falling away. We reverse back down, doesn't really go very far, trying to rally, really no great pressure under, and then we get a reversal and we've got rising pressure here, which is what we want to see. In a falling market, remember this is weekly, so this is 4 or 5 weeks of price action we're dealing with here, and we've gone from, where are we, 240 all the way back down to 180, so it's a big move. It's only 4 or 5 candles, but nevertheless, this is a big move. And we see the darker orange, if we can call it orange, dark orange, I guess. So we've got increased pressure here, rising pressure, which is what we want to see in a price waterfall. And in addition to that, look at the height of those pressure bars. They're all pretty much the same. So it's really telling us that, yes, this remains bearish. And indeed, when we get the pullback here, that doesn't even manage to register above the fulcrum. It's still the salmon pink of mildly bearish. So we haven't crossed the line. We go into this congestion phase and we go back into bearish again, and down we go, and we get rising pressure bars again. So this is what I meant by reading the chart is very similar to reading the VPA chart, the volume chart, where we're looking at those fundamental principles that we want to see in action when we see price action rising, price action falling. And of course, I haven't got a congestion phase here, but I've got one or two on some of the other charts. When we move into congestion, you will see virtually no reactions at all, either above or below the fulcrum. And of course, if you're looking at it from a volume perspective, the volume would be very low and we'd see narrow price spreads typical of a stock or whatever it is you're considering in congestion. The price will be very narrow and the volume will be relatively low, and there'll be virtually no activity whatsoever. Then we get a nice injection. Pressure injection comes in, rising bars, which is great to see, really pushing that trend higher. We drop off a little bit as we go into congestion, then we get another injection of pressure to take it up to the next level. Then we get a 2-bar reversal at the top here. We've got another 2-bar reversal, so we've got two up thrusts here. If you convert that into price action, one over the other, you've got up and down. That's an up thrust. You've got the same here, up and down, so one up thrust followed by another. What does that signal? Well, it's certainly signaling weakness. It's not particularly strong. You can just infer that purely by looking at the price action, and we would just by looking at the price chart. You wouldn't even need to look at volume to draw a conclusion from those two pieces of price action. In we go, and then we move into the bearish phase of the price action, where we've got change to orange from our salmon pink and rising height of those bars as well. And again, the strength here is uniform. It remains high. It drops down to this level, but then it remains pretty high through that level as we move down here, and then we come out pretty rapidly on this in this occasion into bullish. Our first bullish is strongly bullish, and up we go. So we get 3 weeks there of strongly rising pressure, and that takes us nicely up here, and that continues through here. There's no drop off. Yes, we get a change in color, but look at the height. The height has not fallen. It's remained pretty steady throughout that phase of price action. So we're supportive of the trend. The pressure is still supportive. It's not diminishing, and on up we go to the next level. And this is where we are as of last week, with a week to the upper body because we saw that pullback on the daily. Finally, onto the monthly. Let's just pop that one up full size as well. Just move. Oops, sorry. Let's just move this box out of the way. Let's click that back to there. There we are. That's where we were. And now we are looking at a very extended phase of price action going all the way back for 6 years, 5-6 years here. We're on the monthly time frame. But as you can see, the principles are identical. Here we are back in 2016, right over on the left of the chart, coming out the back end of 16. A very nice trend, rising very steadily there. And what do we have with it? We have rising pressure bars as well, punctuated with pauses in the color, but not pauses in the height of those. We had a little dip here where we had a minor reversal, but then that's what you expect to see. You're very rarely going to see a trend like this with no red in it. These are all green. It's very unusual that you get 10, 11, 12 months of that, but we did in that case. But the principles are exactly the same. We've got pressure coming in. We've got rising pressure bars. Even the transition to the lighter blue is rising as well. And then that only changes once we start to see a potential reversal into bearish and a move lower, as we do here. Then the bars themselves fall in height, and we come back down to the fulcrum point, and we get a big injection here of orange. And that kind of maintains across through this phase of price action here, really maintaining that. It's really telling us that this stock is not looking particularly bullish. We get a little bit of price rally here, but it's really not going to go anywhere. It's just maintaining that that bearish sentiment that was injected here is really being retained, and it's pretty weak, the stock. So until we get a reason to buy, there is no reason to buy. But looking at that particular candle there, that huge hammer candle, and of course, this is where we get into COVID. This is really the precursor to the COVID. The start of it, the pandemic, was early March, around that sort of time. Indices collapsed, obviously, on the news as it swept around the globe. Stocks fell sharply, indices fell equally sharply. And then, of course, as they always do with such events, which is an ideal opportunity for the market makers who must have made an absolute fortune throughout this phase of price action, the market recovers relatively quickly. This was in a month. So we get this huge deep hammer candle. Tons of volume would have been coming in. The same here. And then we're setting up for a recovery, which is indeed what we saw. Beautiful recovery for many stocks, of which this was one, and typified with our pressure bars rising in conjunction with the rising trend, widening spreads as well, and up we go all the way to the top. So again, it's a classical example of the mirroring of the volume price analysis methodology with this indicator, the volume relative strength indicator, and we reference it to pressure the whole time, because that is really what we're looking at here. We're looking at pressure. So then we move on, we move into a more sort of phase of price action with a bearish sentiment to it. Stock rallies here. And of course, there'll be news in here all the time. And now we're back into a bullish phase once more for the stock. Up here, we've had this reversal as a result of earnings. But from a technical perspective, purely from a chart perspective, we've obviously broken through 250, 260 here, which would have been a decent level through here to look at it from a potential buy opportunity. And it's being supported by our pressure indicator down here as well. So that's an extended look at Caterpillar. I won't spend so long on the others, but I just wanted to give you the flavor of the indicator. And really the simple takeaway from this is that it really doesn't matter what time frame you're using. The principles we apply in exactly the same way as we do with VPA are identical. It doesn't matter what approach you're taking, whether you're an investor or whether you're an out-and-out trader. The principles of using the indicator are identical. Let's go to the next one, which was Honeywell, which is HOM. Let's click on that one. There we go. Let's just whiz through these. This is the daily. I'll try and pick up the highlights for you. This is an interesting one. It gives you two views, if you will, of the indicator. First of all, the lack of momentum, lack of trend here is absolutely crystal clear. This has been going on since April. We've oscillated around. We're really not going anywhere. We're kind of climbing. Yes, we've had a modest move here. Where have we gone from I don't know, 198 up to 208? So a $10 move, but that move has taken 2 months. So really very, very labored progress. And that labored progress is really indicative of the height of the pressure bars through here. And similar to the downside, it's not a bearish stock. It's not a bullish stock. It's just a stock that is really not going anywhere. It's mildly bullish, I guess, over a much longer period, but it's not really translated to anything, certainly from a daily perspective. So it's oscillating around and trying to rally, and then bang, in comes the bearish sentiment. Really does inject some very, very heavy pressure to the downside with that down candle, which takes the stock down 204 to 106, $8 or so. And what's interesting about it, as you can see, and again, it reinforces this point, the height of these bars, whilst they're diminishing a little bit, they have not gone back to zero. They're not declining sharply. They are maintaining the sentiment that is heavily bearish for this stock right now. And they're just reinforcing that point and telling you this stock is very, very bearish at the moment. Yes, they've reverted to salmon pink, but the height of them is not falling away sharply. It may fall away sharply next week, but for the time being, what we've seen in the last week, certainly in the last sort of 7 or 8 days, very bearish in that particular time horizon. step down onto the weekly chart for Honeywell, and again, you can see all the lessons that I've been explaining, the oscillation between the fulcrum point. This, for example, congestion, quite volatile congestion here as well, but really going nowhere. The pressure bars are very small. They oscillate up and down. The stock's not going anywhere. And then you get these punctuations on the chart where we do get strong phases of price action, falling away sharply the stock, and that's signified by rising pressure bars and a dark orange color, really confirming that. We've got the same here. Then we get a reversal to the upside on the bullish side of the market, injection of pressure here, nice continuation of height. They're not falling away, so really giving you a good strong indication that this stock is on the way up. Up we go. Then we get to the top of that particular rally. We get this candle, which in its own right is telling you there's weakness on the horizon. And that's when we see the drop off in the height of the bars and back down to our fulcrum again, and we reverse again, and on we go. And really, that is the pattern. That's what you're looking at. And it doesn't matter on the time frame. And if we go right over here to the right-hand side, what we saw on the daily, this is converted into here on the weekly, where we've got two pressure bars rising and both orange. So it's telling you this stock is bearish, very bearish at the moment. Over onto the monthly, and again, very similar lessons. This was COVID in 2020 here, March. Big orange candle for that, but look at the size of the wick to the lower body, and the same here, and hence it was no surprise to see that take off. We saw the bullish rally follow thereafter, and here we are, just starting to develop that bullish that bearish tone to the stock as we get down to this potential level of support. And just to throw this in as an aside, which goes without saying, and I hope it goes without saying, is that, of course, we're looking at this indicator in isolation. We will be looking at all sorts of other things. We will be looking at this in multiple time frames. We will be looking at the sectors. We will be looking at the indices. We will be looking at broad market sentiment. We will be looking at this from a technical perspective. So have we got a strong area of support developing here? We will be looking at it from a volume point of control perspective. Are we setting up to approach a low volume node? Are we at a high volume node? Are we at the VPOC itself? All of this, putting it all together, these are all the elements. What is the VIX telling us? What is the broader economy telling us? What are the fundamentals doing right now? And most importantly, where are we in the economic cycle for this particular stock and this particular sector? So I appreciate this is just one chart and we're looking at it in isolation, but of course there are many moving parts that we bring together when we analyze a stock. But I've obviously, for the purpose of this video, it's purely looking at the indicator in this very clear way, which I hope gives you a very crystal clear view of how to use it and how to apply it. So that was Honeywell. Let's go to Apple. There we go. Just put Apple up on the charts. And just as an aside, one of the things which is very useful, I find, are using these interlinks up here. TradeStation has them as well. This is interval links. I've got these two interval linked, and I've also got the instrument link as well. So it's just a great way of skimming through stocks very quickly to on different time frames or whatever it may be. So this is Apple on the day. Had a bit of a down day on Friday, as it was, and sold off quite sharply. Up until that point, very bullish, punctuated, as you can see, with pauses in that bullish sentiment, but nothing to particularly move below the fulcrum line, which was interesting. So this trend was very steady, very contained, very even paced, punctuated with pressure, yep, punctuated with minor pullbacks in terms of the pressure bars, falling away here a little bit as we had this sort of reversal. Then we pick up the pressure again, and on we go. So that continued for where are we? 3-4 months. So it's a continuation of. It's not a trend that's rampaging higher, but it's a very solid trend. and very solidly described by the indicator. And then, of course, we come to this week, or last week rather, and Friday's price action, big down candle, gap down rather, big drop off, and we're down $10, $15. And of course, we get a big injection of pressure, massive pressure spike to the downside there. And that was also signaled, interestingly, where we moved below on these days here, just prior to it, and the pressure was increasing because we had a gap down day there, the prior day, and now we have a dramatic increase in the pressure volume as far as Apple is concerned. So a really interesting chart, I think, with the using the indicator there. Move to the weekly. What have we got on the weekly? This is the bullish trend described by the VRSI indicator, and as you can see, what's interesting about it is the trend is it's a really nice steady trend. It's not quite 45 degrees, but it's certainly getting onto that way. So this is a really nice trend to ride. And what's interesting about the height of the pressure bars is that they are all pretty consistent. There is very, very little here in terms of a drop away. And it goes back to the point that I talk a lot about, Anna and I talk a lot about in the live webinars that we do. The issue for all of us, whether we're traders, whether we're investors, when we have a strong position in the market, we don't like to lose it. And the market makers know that full well. And therefore, they will use any emotional trigger they can to get us out of a strong position and to get us to close out too early. And with all the indicators and with many of the indicators we develop, the idea behind it is that designed to help to overcome that emotional trigger of getting out of a position because we're frightened. We don't want to lose a bit of profit that we've got and to see that dwindle away as the market reverses in a minor pullback. And this is very much like the trend monitor, which I've referenced elsewhere, where it's designed to help to keep you in the trend, to maximize your profit, if you like. And it's very much the same here. What we're trying to do is really provide a view on the pressure and whether that trend is weakening or does it have some trend momentum left in it. And really, that's very much part and parcel of what we're doing. And you can see it here with the bars staying at this consistent height. It's really telling you, no, don't get out. Don't be frightened out. This has still got some distance to run. And really, of course, we all have to accept these sorts of price moves when we get earnings announcements, whatever it is, that is always going to be an aspect. So, of course, in trading through the quarterly earnings seasons, you have to decide whether you're going to trade through them, how you're going to protect yourself. Are you going to protect yourself with options? How are you going to do it? Are you going to close? Maybe you've got stocks that you were going to sell anyway, so perhaps it's best to sell ahead of that. But if you're going to ride through it, how are you going to protect yourself to the downside if it reverts against you? Those are decisions you have to make, and you have to make those quarterly as we come up to each earnings season. They are just part and parcel of investing life. That's just something we have to accept. So that's Apple on the weekly. Let's roll into the monthly. Here we are. And again, very, very similar lessons, which I'm sure you're getting used to now. This trend here is fairly flat. It's rising, but it's not particularly strong. So the pressure bars are, yes, they're on the right side of the fulcrum, but they're not particularly strong. We don't get any particularly strong bearish moves either. And then we start to see, as the trend starts to increase the angle, we start to see an increase in pressure because the price is going up more quickly. It has some momentum behind it. And you can see exactly the same here. These are rising. This is rising in a rising trend. The trend has actually gone up sharply. So the pressure is going up there. It's really forcing the price. And of course, we will be looking at our VPA analysis as well. Similar sort of process here. We've got dark blue, punctuated with some light blue, but generally speaking, we've got rising pressure. Then we come into a bearish phase. We've certainly got some downward pressure here, and now we're back into bullish as we move on up into the next phase. We had that down move on Friday when it was last week, and certainly the upwards bullish momentum has toned back. We've had a pullback in terms of the pressure bars, as you would expect. That's Apple. Let's have a look at Amazon. Another favorite. There we go. Start on the daily. Again, very similar in many ways to Apple, where we've got a very steady trend. It's very measured. It's not rampaging, but the pressure bars are nice, nicely supportive, rising dark colors where we expect them. Not a great deal dipping below the fulcrum of 0. So really maintaining that bullish trend. And then we get this big gap up at the end, big pressure coming in there. And no doubt we will see a sell-off in the next couple of days as we see profit taking coming in there, I'm sure. But that doesn't mean the trend has come to an end, far from it. It's just a question of profit taking, and with a nice platform of support in here at 135, I'm sure we'll see Apple stock continue on. Precisely the same here. We're looking at the longer term time frame, about 18 months here, with the bearish move here, move lower. We've got rising pressure, what we expect to see. We move into this area here. So the trend, the bearish trend is continuing. It's not coming to an end just yet, but then we start to see it come to an end over here. The pressure bars are much lower, much shorter around the fulcrum. And then we start to see an emergence of the bullish trend, which is nice to see. Rising bars here, dark color, and they're all pretty much the same height through here. A little bit of a slowdown here, but certainly continuing on up here. So no reason not to expect that to continue as well. That was on the weekly, and onto the monthly for Amazon. There we are. And that's all reflected in a much more compressed time horizon as you would expect. Let's have a look at Tesla. Another very popular one, of course. There we go. And again, I'm sure the messages and the way to use the indicator are becoming much more, what I hope, much clearer now. Move to the downside. The pressure bars here are much the same, and then we see them declining as that sentiment declines. We move into a phase of congestion, very tight to the fulcrum, and then we get this wonderful rising shape of our pressure bars associated with this nicely rising trend, strongly rising trend, which is roughly at 45 degrees. So a very nice trend there on the daily time frame, and supported with our indicator. Bit of a pullback here. The trend here is less sustained than over here, so our pressure bars are not so dramatic. Nevertheless, they're supportive of the move, but they are not so tall. In other words, signaling that yes, there is a trend. Yes, it's tradable, it's investable, but it's not as strong as the previous trend, and the angle of incline is certainly not as strong as high as this one. It's not as inclined as this trend, and that's what we should expect to see. And then we get a sharp reversal into a bearish move, colored with the darker orange, and we're now in a phase of, I would say, mildly bearish at the moment, certainly from the height of the bars down here. That's on the daily. Let's move to the weekly. And as you can see, all the same lessons again. The trend lower, rising pressure bars. Then we see the decline. We're into the upwards, strongly upwards move here. It declines. We move into congestion. We get an injection of pressure here. We get rising pressure bars. Wonderful to see. And all of pretty much the same height. So it's really telling us at that stage, yes, bullish pressure is still being maintained. Now we start to see this quite sharp drop off down to this particular last weekly one on the end here. So that is certainly coming to an end as far as that time scale is concerned. And this is the monthly. Almost nothing to see over here. And then on we go up into all the various lessons that I've been explaining. The very sharply rising height of the pressure bars here in association with falling volume there as the trend accelerates. That's Tesla. Let's have a look at Johnson & Johnson, which is J&J. Let's click on that one. Let's pop open the daily here. What have we got here? Well, we had a rally here on a gap up, but that gap really didn't go anywhere. And it's almost instantly signaled by the fact that the pressure bars are falling away quite strongly. And although the market didn't roll over, the stock didn't roll over particularly quickly, it certainly went into an extended congestion phase, as denoted with the tiny little up and down bars here. And then we start to see the bearish rotate down into the rising bars here. And something I pointed out earlier on in one of the other videos is when you get these high pressure bars at the start, you can scroll forward and it just removes them from the screen. I appreciate we've got some over here as well. You've got to remember that just like volume, as we do with our volume charts sometimes, where we've got a volume bar that's perhaps distorting everything, and it's also true of trading electronically when we're in Globex, to remove the distortion, if you like, because they will, these bars here, which are big, will distort what has gone on over here. And I can assure you this would have been a very nice move, very nicely rising pressure bars, punctuated with salmon pink, but lots of orange ones in here on this really steady trend lower. Not quite a price waterfall, but certainly a trend lower, and a strong trend lower at that. And similar here, where we see the rising market, the stock is going up. These would be much taller if these weren't here. So you always got to remember that what we're looking at here is it's compressed by what is going on over here. So these would have been absolutely fine. They would have looked nice and tall, but they've been compressed by the fact that we've got this massive injection of upwards momentum, upwards pressure, taking the stock really high and quickly in a very sharp trend. And now they're dropping off, and we have this drop down, and we've gone back to the zero line here. So we've gone up very sharply. Now, obviously, what we're looking at here, certainly from a volume perspective, when a stock or any market takes off that quickly, it's always it raises alarm bells, because when something shoots up pretty fast, the chances are it's going to come back to earth pretty fast as well. It's a bit like the skyrocket. We see it a lot. We've seen it multiple times in all sorts of markets, cryptos, stocks, you name it, indices. There's a sudden spike. A market there's huge volatility. It goes very quickly to the upside, and almost invariably, it's like Anna always calls it the souffle effect. And it's something you always have to be careful of, and you'll see it a lot around earnings, particularly because it's driven by the market makers, and market makers know about emotion. And it's the emotion of the fear of missing out. When you see a fast-moving market, and it's one of the powers of the volatility indicator, which reveals that through the prism of average true range, because I can assure you that the fear of missing out is pretty powerful. It's another powerful emotion. We all want to jump in. We're all sitting here. We all want to make money. And we see something that's moving quickly. We want to jump on it and make money fast. Unfortunately, the opposite normally happens, because we get in at the top somewhere, and then it promptly either goes into congestion, which is painful, or it reverses, and we're left high and dry, or we're stopped out. Simple as that. So whenever you see snap reactions, very quick reactions, you're always going to be looking at the volume as well. Forgotten where we were. Are we on the daily? Yeah, I think we were. Let's move to the weekly. There we go. Nice bearish trend there, supported with rising pressure bars and all orange throughout. So really very, very, very nice from a tradable perspective. And to pick up on another point, this is a market you trade both ways. I know we're talking about investment here, but from a trading perspective, you have to trade short as well as trade long. I know to some traders and investors that's an anathema thing to say, and I know the stock market has this bias to the upside because everybody wants their stocks to rise. They don't want them to fall. But the fact of the matter is, to make money in this market, you need to trade both sides. So we get through to the end here, very similar to many other examples. And now in the last, or on the weekly here, on the last couple of weeks, we've seen an injection of pressure here. So we've had nice rally. We've got a doji candle here. So the pressure has come off quite a bit. And it'll be interesting to see where that one goes longer term. So that's on the week, and then we're down onto the monthly. Not really rising very quickly. It's a trend, and it's climbing, but it's not climbing with any great momentum. Nevertheless, it's a stock that's certainly investable, and the pressure monitor is giving you all those same messages and signals as it moves through that relatively slow trend. Couple more. We've got Walgreens boots, and then we'll have a quick look at Meta. So that's WBA, which I always remember, which for reasons I won't bore you with. This is on the daily. Let's have a quick look. There we go. And this is a nice example of the big bearish momentum that's injected as the stock falls, gap down strongly. But then it gives you a signal as to, well, is this bearish momentum going to continue? And the answer is no, because first of all, we've had a reversion through to salmon pink. And secondly, over the next few days and couple of weeks, that bearish pressure is diminishing quite rapidly and all the way back down to the fulcrum again. So really, no, not at the moment, not in the short term at any rate. So it's gone back to this sort of point where it was here, oscillating about the fulcrum, really not going anywhere. And of course, what we're looking for, certainly from an investment perspective with a stock like that, is where we have an extended congestion phase. It's a question of being patient. We're in an accumulation phase as far as the market makers are concerned. They will be accumulating stock. There will be oscillations. There will be volatility. It will be moving sideways. It will be creating a floor and a ceiling. And ultimately, at some point, there will be some sort of test. And then the campaign will get underway. The market makers will begin their campaign and the stock will start to move and start to climb. I move away from that congestion phase, break through the ceiling of resistance, and off we go up into the trend. So when you see congestion, you've got to be patient. Well, none of us are very patient, which I appreciate, but that's what we have to be. And this really describes the longer term position for the stock. We've seen it come all the way down from up here, $54, currently trading around 25 or something, I think, or 29 rather. Very bearish. We had this attempt to rally. We got an injection of pressure here. It certainly got it to rally nicely. So that would have been a nice move from about $28, $29 up to 40. But then it flattens off, and very quickly that bullish pressure has declined rapidly over 3 or 4 weeks to next to nothing, and we revert back to a decline in the stock, the gentle decline that we've seen going on for, well, this is a year and a half, so it's not looking great. But at some point, this stock may rally, but the question is, you've got to be patient. You've got to wait for that congestion phase to develop. You've got to wait for the floors and ceilings to build. And of course, ultimately, that will all be signified with volume, the accumulation of volume, the stopping volume, whatever it may be. And then ultimately, when the stock does break to the upside and move through a resistance level, that becomes support. And provided that breakaway is on good volume, then potentially that is a stock that could be one to buy as it moves to recover from the lows. This is on the week. That was the one we were looking at, beg your pardon. And finally on to the month. There we go. And really, that describes it even further, because we're going back now to 2016, where this stock was ultimately up at $85 here, even further back. So we've come a long, long, long way down. Now, it's very easy to look at a stock like this, and it's something we describe elsewhere in the program. Very easy to look at this and think, well, it was $85 one day, so I think I'll buy it, because $29.86 has got to be cheap, and it's bound to go back to $85 at some point. That's the rationale. It's the rationale. We all look at a chart like this and think, oh, it's got to be cheap because it was $85, so let's buy it. Sadly, that is not the approach to take, and I hope through all the lessons and all the examples and all the documents and everything that we teach in the webinars that you don't go down that route. It's a very understandable route to go, and one we all want to go, I guess, and it's also the attraction, of course, let's be honest, with penny stocks and so on, where the sentiment of seeing a stock going from $1 to $50 and $100 is just a magical one. Of course it is. It's dreamland, but then that's what it is. It is pretty much dreamland. If you do buy this stock, then you're going to buy with very much cold analysis, whether that is technical analysis, whether it's fundamental analysis, or whether it's a combination of the both, which is what we suggest. that's absolutely fine, but not on the principle that, well, it's cheap, it was expensive once, so it's bound to be expensive again. Sorry, I got sidetracked there into that particular conversation. Apologies about that. One last Meta. Again, something I'm sure you're all familiar with, or a stock you're all familiar with. Meta stock. Let's jump onto the weekly. No, let's go to the daily for a minute. There we go. Self-explanatory, really. We had three pressure bars here where we went below the fulcrum. The rest of the time, it's been bullish all the way. And really, even here, they're not terribly tall. So yes, we had a pullback, but immediately reverted back to a lighter color. And on the fourth day, we went back to above the line again to bullish sentiment. So nice trend, supported throughout with darker blue, lighter blue, relatively tall pressure bars right the way through, injections of pressure here and there. Not a dramatic trend, but a steady trend, I would say. Rising steadily, not aggressively rising. Nice and steady, nice and even paced. Nice to see. And if we see that on the weekly chart, there we go. We've got the two sides of the coin here. We've got, to use a football analogy, a game of two halves for Meta. Again, this is over 18 months. We had the decline here. Very much signaled with our pressure over here. Yes, it declined as we saw this rally here, but we continued below. We continued to maintain a darker orange here. We got a further injection down here before we finally come to the end in this early part of 2023. We start to see the development of the bullish trend, and we see our pressure reverting to the other side of the fulcrum, and we revert into darker colors, punctuated by lighter colors. But what's interesting about the trend, once again, look at the height of them. They're pretty consistent. This is a very steady trend, nicely rising, lots of money to be made here. But the height of those bars is pretty consistent. There's no dramatic falls, there's not dramatic rises. It's just steady, even paced stuff. So that's on the week, and finally on the month, which of course that is reflected in as well once more. Big trend lower, the fall, but as you can see from a shorting perspective, very, very healthy in terms of giving you that confidence, which is what this is all about, to short that stock, because the volume, the pressure bars here are very, very consistent in height, telling you that this has massive bearish sentiment, weight, momentum, call it what you like, behind it. This is not looking positive at all. And it's only when you see the height of those bars fall away in these last 4 months, and they start to decline and revert back to the fulcrum, and we see a reversal in color into dark cyan blue, I think it's called, but you can change it to any color you like. And then we start to see the stock marching north, very even paced, quite sharp trend higher. But look at we've got 5 months of the dark color supporting that. So we've got lots of good solid pressure on that. We've got a minor reversal coming into play, but the height of that pressure bar is still very much up there with the rest of them. So it's a really classical example, if you will, of the move lower, the examples of the pressure bars. Where are they in relation to one another? How they measure up against one another using benchmarks, and the rising trends with rising pressure bars, falling trends with falling pressure bars, with rising pressure bars, and pressure bars all of the same size, confirming momentum and pressure in that particular move. So that's Meta. That was a run through of the 8 stocks. And I hope that I've covered all the lessons there and really demonstrated to you that however you use this indicator in whatever time frame, the principles are identical. So I hope you enjoy it. And as I've said right along, please make sure you use it with your VPA methodology as well, which will underpin all those key decisions on the indicator itself. So thanks for watching. See you soon, and bye for now.